I'm just interested. I've got to ask some questions. This has been bugging me. It bugged me when I first heard somebody ask me these questions, so I'm going to bug you. Here's the questions. Are you interested in becoming financially free? I mean, really free? Kicking the job to the curb? I know, you love your job, don't you? You do not. Don't lie to me. Are you interested in improving your financial blueprint? Think about it. How about making your money work for you? Would that work for you? I think it would work for me. It can work for you. Paying down your debt and cutting up your credit cards. You don't need more credit, guys. Really, cut up the cards. How about if you could stop living a champagne appetite on a beer income? Ooh, I struck a nerve. I can hear you. Okay, so look, this is called financial wellness. That's part of living the lifestyle you deserve. So no matter what your dreams and aspirations are, I want to welcome you to this edition. This is a special edition. And as you know, this show is all about personal wellness and the human condition. But indeed, it's really all about you. So, you know me. My name is Robert Keller. I'm your host for the next half hour. Welcome to the show. You could have been anywhere else, but you weren't. I honor you for being here. Thanks for being present. You might want to get a piece of paper and a pencil because some of the stuff you're going to hear tonight is, I don't want to call it earth-shattering because John would not be happy if I said that because he's the real thing. My special guest today is a remarkable financial wellness guru. And I say that not to boast or brag, but he is amazing. He's amazing. John Bannan is principal, trader, and a co-founder of HowDoITradeStocks.com. John has been trading stocks for over 10 years, and Lord knows much more than that. He just, in the last 10 years, he started to get serious. He has spent over hundreds of thousands of dollars on his trading education with various academies such as Better Trades, the Online Trading Academy, Rule Number One University, and the Wealth Builder Institute. His mentors, we all have mentors. If you don't have mentors, you better get some. These are John's mentors. They include people like Phil Town, who is considered to be today's leading expert in value investing, and Courtney Smith, a leading hedge fund manager and business trader. Okay, some of you probably are not used to this lingo or the jingle jangle here, but those people who are investing, you know what I mean by hedge funds, you know what I mean by banking trader. Okay, so most recently, he has been collaborating with the trading partner of the last surviving apprentice of W.D. Gann. Look that up on the internet. He is regarded as the greatest trader that ever lived. And indeed, it's one of John's mentors and part of the reason why he's here today. One of the things that bothered John throughout his educational and trading journey was a lack of certainty in everything he was learning. As he puts it, no one was teaching him how to actually make money. Does that sound familiar? Of course it does. He wanted certainty. He wanted to know that no matter what the market did, in the end, he would win. With this in mind, and although his systems are already producing outstanding and almost unheard of results, he is nose down every day looking for ways to improve his systems and to develop new systems that consistently outperform the market. Like the other members of the Living the Lifestyle You Deserve professional team, John is eager today to share his experiences and expertise with you so that you can begin to learn to live how you can live the lifestyle you deserve. And in fact, if you are working hard and you take action, how about becoming financially free? Today, John will present Investing with Certainty. Yes, I said certainty, investing with certainty. John, welcome to the show. Glad you're here.
Thank you for having me. Delighted to be here.
I want to set the table. I want to set the table because it's really important that, you know, trading is a passion for you.
Yes.
And I tell you something, it's not a passion for people who keep losing in the stock market.
No.
Not a passion at all. So a big reason why I invited you to the show is no surprise. The average Joe on the street has been losing his shirt in this economic downturn and its environment. We're never told the truth anyway. We're all told that it's improving. Sure, things are getting better. They are not getting better. Having spent some time with you, personally, and I've known John for quite a while, I understand that the majority of trades are made around emotion and fear. And the current market being unpredictable. There, I've set the stage for you. It's your turn. Tell us about the certainty thing. Tell us, make us a believer.
Okay.
Okay.
Certainty as a word, as a concept for me, was what I have always chased when it comes to trading or investing. Okay. To be certain that you're going to win, you're going to make money over time. No one has a clue what the market's going to do next, right? There's no way of knowing. but that certainty is about trading a system and understanding how systems are put together, and looking back in time and say, well, what did my system do over a period of 5-10 years, and will it allow me to have clues to what's going to happen in the future, no matter what the market throws at you. Similar to how a casino knows it's going to make money. It has an edge. It knows it's not going to trade through fear or emotion. It just has a system.
Okay.
So it's just about having a system.
But that system doesn't serve your purpose if you're talking about casinos, does it? I mean, if you and I go to a casino, there's no certainty we're going to win.
No.
Okay,
but
so why is your system different than a casino?
Well, it really is about being the house. Right?
Okay.
You have to, and you think about a casino understands its probabilities. It can probably dial right down to understand how much money a certain person is going to sort of bring into that casino over, 100 people come in, they know sort of a dollar value of each person that comes in, right?
Yeah.
So because they understand probabilities, they have an edge. They don't use emotion. They manage their risks in terms of bet size, and they don't let a big high roller come in and throw a couple of $1 million in a bet without some kind of risk control in there. So it's really about risk control, understanding statistics, and how you manage your risk going forward, because we don't know what's going to happen next.
So would it be a fair statement if I was to say that part of your ability to know how to invest with certainty is the fact that you become the house, you become the control, because you know the statistics and you lower the risk. Now, I'm not gonna go ahead of where you're going with this whole interview, but is it the fact that you end up being the house?
Yeah, you have to be the house, because if one of the things you can't do when it comes to trading or investing is take the emotion out of it, because we're human beings.
Yes.
And when it comes to your money, you're particularly attached to it emotionally, right?
Okay.
So you can't remove emotion from a human being. It's just part of what makes us human beings. But what you can do is remove emotions from your decision making, which is really important.
How do you do that?
Again, back to systems. You have to understand certain dynamics of systems. So you have to understand, there's certain statistics. I don't want to get into too much detail, but I'll cover a few.
Okay. Yeah.
There's a couple of points that you have to understand. You have to understand over a period of time how many times was a system right versus when it was wrong.
Okay.
Right. So it could be 50-50. You can be right 50% of the time and wrong 50% of the time, but still make money.
So a positive outcome that's a repeat.
Yeah. So a repeating positive outcome. Right. So over a drawn space of time. And when it comes to average size of winners, was your winners bigger than your losses? Again, really important, the old adage of let your winners run, cut your losses short. So small losses, big wins, right? Very important to have those two, right?
Now so let me just get clarity on this. So you let your winners run, and you cut back on your losses. So is part of investing with certainty the ability to reduce those risks down to a much better way than somebody who doesn't have a system and buys stocks emotionally every day?
Well, absolutely. Whether it's my system or someone else's system, you have to have a system.
Okay.
You have to have a process and follow the process to the letter. I mean, again, back to the casino idea, they have the discipline to follow their system.
Okay.
To make sure that they have the things in place that are part of their process, like the drinks, all the razzmatazz that goes on, all that stuff. So it's part of their system,
yes.
right? And they understand how to manage the risk within that system, and they follow that system. They don't go out with it. Whereas most people that start trading or investing, they have ideas, and then they'll go off in a different direction, then come back and then go off in a different direction. There's no path that they're on, they're following systematically.
It's interesting because that really scares me when I hear you say that, and it's got to scare people who are viewing the show and listening to what you say, because I guess I can only surmise that the largest number of people who buy common stocks on a stock market are buying it totally based on emotion. I mean, the odd person might know what the company's doing. They might have an idea that was a report somewhere by some trading guy who said, here's, the analyst is saying it's going to happen, and most times it doesn't. So here I am coming into the system, not knowing anything about stocks. I mean, a lot of people watching this right now have never bought stocks. Okay, because I want to ask you a question later, is how difficult is it? But here's my position. here I am buying stocks against people who the majority buy it on emotion, don't know what they're doing. So I'm getting in thinking I'm going to win. What are my chances of winning when I'm into a pool of fish in a giant pond with a lot of these buyers who are buying it on nothing more than emotion? That's scary.
Well, it is. Any type of trading and investing is not easy. None of it's easy.
Okay.
But certainly from my point of view, back to the system, having a system that stacks the odds in your favour gives you an opportunity to actually stick with something, knowing that even if it's not going particularly well over a period of a couple of months, because that can happen, right? You don't know what the market's going to throw at you.
Yes.
So not everything's always rosy in the garden, right? Even for the best systems in the world. But what you don't do is stray away from it just because that happened, because you understand it's within the dynamics of a particular strategy that you're following. Okay, so understanding that emotionally makes it easier to continue following it. In terms of, just to clarify your question, just go clarify your question again on that.
Well, I was talking about the majority of people who are all buying on emotion in the stock market.
Right,
And if somebody
right.
comes along and they don't know what they're doing,
Right. Yeah.
they're looking for what you're talking about. I mean, when you say to somebody who's a stock investor, the idea of investing with certainty sounds absolutely ludicrous, because everyone's got a system, like big deal. People try the system, doesn't work. Now, I know personally, I've tried John's system, okay? I'm sort of like a testimonial, but it doesn't it's not in conflict with what we're talking about today, because I'm remaining neutral. But when we were in the stock market back in October, we had advances of 30%. Who has got that to say? 30% increase in a market that's been there. So I know John's systems work, and we're going to talk in the second half about what that system's like. But the thing that I'm more concerned than anything else is that the fact that most of the people that we're talking to will look at that and say, investing with certainty, okay? Because some people have said something like that before, but now comes John Bannan, who really has a system that works. You got to be a believer.
Yeah.
Got to be a believer. I mean, it's worked for you, correct?
Of course, yes.
Very well indeed.
Yes, very well.
Okay,
indeed.
so you're a
Yes.
millionaire
Yes.
many times over.
Yes.
I don't bring people to the show that aren't, because you have earned the right to sit there and talk about investing with certainty. So that's exciting. We're going to go to break in a minute. Tell me something more about this, because the next half we're going to talk about how that system works. But what else have you got to tell me? How can you reassure now, before we go to break, people to come back to the second half, because you got something that is certain?
Well, it really is a case of taking the emotion out of it, because we're very emotional beings. So having a system that you can follow, a path that you can follow, and from my point of view, I sort of do what I preach, and I share what I'm doing with people on a daily basis, so people can follow me also, right? Wow. So there's no hiding place for me. Really, either works or it
we're going to
doesn't.
find out in the second half. Yeah, I've got John Bannan here interviewing John, investing with certainty. It's living the lifestyle you deserve. We're talking all about financial wellness, which we all care about. I mean, there's nothing wrong with making money and kicking your job to the curb. It's about time we start becoming independent. And if you go to a bank, everything John's talking about, they're not going to tell you that. So we're going to break. Thanks for being here. Robert Kelly, your host, Living the Lifestyle You Deserve. See you soon. Welcome back, everyone, to Living a Lifestyle You Deserve. This show is all about financial wellness, and today I've got a special guest. A guest probably like you may never see again or hear again. This expert, this financial guru is unbelievable. He's talking to us today about investing with certainty. He's got a system that actually produces unbelievable results. Now, when I say unbelievable, that sounds almost as if we're going to guess that it's maybe going to be on or off. But no, I know personally it does work, so that's why he's here. John, welcome back. John, by the way, has his website is howdoyoutradestocks.com. If you want to write that down and learn more about John later on, please do. John, now, with this back part of this program, I would ask you if you would please tell us all about what is this system, how does the system actually work in play,
sure.
live play?
Well, one of the major components to this particular system is understanding risk. Now, I don't actually trade stocks, which kind of is a strange one, but considering the website's called howdoytradestocks.com.
Yeah, exactly.
I don't trade stocks. I used to trade stocks, but I got really savvy a few years ago understanding the risks that come with stocks.
Okay.
Because what can happen in a stock, and some of your viewers maybe or you have experienced this, I know certainly I have, what can happen to a stock overnight is bad earnings, or the CEO decides to leave. Something can happen in the company, and that company can really tank the next day. You can be down 20, 50% the next day, right? When you wake up, you're crying into your cornflakes, right? Because it's falling out the sky. Yeah. No one needs to go through that, right? That's one of the things that I it's not that I'm saying buying companies, good quality companies, is not a good idea. It is, but that's the kind of thing that can happen, even to the good companies. So I don't actually trade stocks anymore. I trade what's called exchange traded funds. Exchange traded funds.
Yes. So this is what you mean by ETFs, right?
Yeah, ETFs, which is a fairly new concept. Some people have heard of it, some people won't have. But it's like a mutual fund, so everyone generally understands what a mutual fund is. A basket of securities, a basket of companies, which makes it more secure.
Just for those of you who are in real estate, a basket of foreclosures. You can go to the U.S., you can buy 100 properties, it's all in a basket. That's the same thing John's talking about, same idea, except in this case, stocks. Sorry, John.
Absolutely.
Okay. My friends, I want to tell them about that.
Sure. So then it takes away a lot of the risk, right? So you're sort of averaging across a number of different securities. Therefore, there's no, if one of those shocks does happen to one of those companies, which can happen, it doesn't really affect the overall basket that much. It's like a tiny little ding rather than a massive fall, right? So that's one way to really protect your investments. So we use exchange traded funds, but we focus primarily on the US market. Now, I get asked this question a lot, why the US market alone? It really is, it's because it's the most diversified market in the world. It's the largest market in the world. There's nothing wrong with the Canadian market at all. It's just I've gravitated towards the US market because it's much more diversified.
Right.
I use the analogy of it's like Scotland and England playing soccer. Like we've got 5 million people and they've got 50, right. And they're always beating us, right? So because there's more to choose from, right? It's a bigger basket. Yeah. The other thing is people talk about overseas markets and going to Europe and Asian markets, very volatile markets, and certainly right now Europe's very volatile. So the US is a slow and steady wins the race kind of concept for me. So I like the volatility in the US market. So what we actually trade is ETFs that are based on the indexes themselves. So indexes being the S&P 500, NASDAQ 100, and the Dow Jones Industrial. Most people have heard of those names. They might not necessarily know what they are, but they are a basket of securities. So Dow Jones is 30 companies, and it's 30 really big companies. And then the NASDAQ tends to be more tech companies, the Googles, the Apples, and then you have the S&P 500, which is the biggest, not the oldest, the Dow Jones is the oldest, but the biggest basket, because it's 500 companies. So those are the three indexes, those three instruments we trade, ETFs, that are based on those indexes. So we're not looking for market returns, which is not a bad strategy. Just buying and holding those ETFs is a good strategy. And it will return well over time. You'll probably beat 90% of money managers, which is kind of
that's quite a statement. Say that again. You'll probably beat majority of money managers.
Buying and holding
Yeah.
the market itself, like the entire stock market with S&P, the Dow Jones, and the Nasdaq, you'll probably beat 90% of it, all money managers.
See, the logic to me, when we first started talking about ETFs, one of the things that made me feel it was logical is that unlike someone buying just one major stock, like they buy Microsoft, or maybe they buy Apple alone, or any other blue chippers, the ETFs contains a diversification of stocks within that fund.
Right.
I mean, it's sort of like a mutual fund, right?
Yes.
Except
very
this
much.
one is a little different, okay? And you can explain why it's different than a mutual fund, because everyone's moving away from mutual funds now, and some of them are starting to look at ETFs. So what's the difference between an ETF and a mutual fund?
Well, for the most part, mutual funds tend to be the rebalanced at the end of each day, so you can't actually put a stop loss in place. You can't trade in and out of them during the day. You can't decide tomorrow at 2 p.m. to sell your mutual funds. You have to wait till the market closes.
Okay.
Tell your broker, tell your money manager to close out of those mutual funds, as opposed to an ETF, which trades like a stock.
Okay.
So as soon as the market's open, you can buy and sell those ETFs. And there's mutual funds and there's ETFs, and for S&P 500 has a mutual fund and it also has an ETF.
An ETF, yes.
But ETFs are sort of the new kid on the block. But interestingly, you're seeing outflows of mutual funds and a lot of inflows into ETFs because they're much more. They've just got much more the ability to trade them. There's certain aspects that make them better than mutual funds.
So most of what you have as far as the whole concept of investing with certainty is more, I'm guessing here, I'm thinking that this is true. If they were going to write this down, you'd say, one, get rid of the emotions, to follow the system, whatever the system is that you have, and three, reduce your risk.
Right.
Are those the three fundamental things that someone should have on your system? I mean, that's kind of built into your system anyway, isn't it?
Yeah, I mean, reducing risk is a big one, obviously, and not having those overnight shocks, taking that away. And the other really interesting thing about the stock market as a whole, certainly in the US, is that over time it's always gone up.
Right.
You know, you go back to 1870 or whatever, as far back as prices can go.
Yeah.
If you look at the market as it's gone up, it's had peaks and troughs as it goes along, but eventually it goes up. You know, we're breaking to all-time highs, a couple of weeks ago. So, the Nasdaq hit an all-time high 2 weeks ago. So the market always goes up over time, but it has, major shocks in it too. You got to understand how to handle that, right? We understand how to handle those, I like teaching people that stuff because there's no need to sit through a 2008. There's no need for it.
Well, the funny thing is, I remember, and you're one of your mentors is Courtney Smith, and I've taken some courses with him too. But I remember one of the things he did say is, the market's always right. And I think when we're dealing with John's system. John's system is not always right, but he's going to tell us in a minute what percentage year over year, over the last couple of years, he is right, which means to say you make money. But the thing is, when you work with John's system, what I've learned from John is stay with the system. Don't start getting and second guessing what it is, because we've seen a lot of people who second guess this thing, and even John's system won't work. If you don't follow the system, John's system doesn't work. Simple as that. Would you say that's fair? And you always, one of the things I want to mention to everyone who's out there, by the way, as a bit of a waiver, and I think it's really important, is that neither this station or Living the Lifestyle I Deserve or John Bannan are out here standing and proclaiming themselves necessarily as the guru. Well, we call him a guru, but he's not the expert. One of the things you make absolutely certain is that before you make a decision on anything John's talking about, or anything, frankly, when it comes to finance, check with a professional. Get an accountant, get a lawyer, get whomever else out there who knows what they're talking about. Again, not to suggest that we're underplaying John or anything he's got in the system here. I just want to make sure that it's just the wave of the way you do things in your life. You do the same thing on real estate, do the same thing with your money. Because money is very dear. Look after your money and make wise decisions. John, I had to put that in there because it's not a matter of sort of saying, well, we're shying away from what the facts are. But just to let them know that. I think that's just a good, appropriate thing to say at this time. So now, your system. We don't have much time left. I want you to give me an idea how your system works. But the thing is, they're going to follow your system. Now, how much of that knowledge do they have to actually get into this kind of investment stocks like you're doing now? What do they have to know?
Well, really, it was back in 2011 that I decided to start sharing my trades before I actually made them.
Right.
Okay, which allows me to share it with other people. And I made that decision to do that simply because I know I can help people. And you know, year over year, we're about 60% per year, which is quite high for the industry itself, right? More than most people. And now we've been in this massive bull market. It's been going up and up, which has made it easier. But that's been the average, certainly, every year. And I mean, I can't tell you how good it feels to get the feedback from people. You know, like we talked about last October, that this particular trade we were in last October. You know, one of the things the system is really good at is buying bottoms and getting out near the top. You know, I like to catch falling knives.
I like bottoms.
Oh,
Those kinds of bottoms. Oh, sorry.
I like to catch falling knives. You know,
Yes.
one of the easiest
Yes.
ways to make money in the stock market is not the easiest. The best way is when there's blood on the streets, as they say, right? As Rothschild said in the 1980s. You know, when things are really bad. You know, or as Warren Buffett said, you know, when you know, buy when everyone's fearful and sell when everyone's greedy. Right.
That's cool.
And that's really what you're...
I see where he went.
Yeah, so,
Yikes.
you know, certainly when we talk about buying and holding things, you can buy and hold market ETFs, but I like to get out when it's falling and buy back in near the bottom, and that's what the system's very good at.
Okay, so people who want to use your system, well, you know, you do a lot of the heavy lifting.
Right.
Because you're the analyst. I mean, you spent a lot of time as an analyst in the stock market, which is one of the reasons why you got to the point where you found those pearls of wisdom and gems where they did make money for you. We're going to get off the air very soon here, but there's a couple of things I want to ask you before we do finally close. It would be interesting for the viewers to know, and this is a bit of a loaded question, but what kind of margins are you really anticipating? You know, because of history. I mean, historically, you've done reasonably well with this. What kind of percentages are you returning? And how many? In other words, you said let the winners run, and okay. So how many winners? What does it look like?
Well, my system stats is it's only actually right 55–60% of the time. Okay.
55 to 60% of the time. That's only right that much.
Yeah.
Really?
Well, there are systems that are even higher.
And you're saying that you're not even flinching.
But the real key is making sure your winners are 3 times the size of your losses.
Okay.
That's the real key. So if you're even if you're right 50% of the time, if your winners are bigger, 3 times the size of your losses, over time you're going to make money. It's just a foregone conclusion.
Okay. Yeah. So this is very cool, and you're going to be able to, you know, reach John. You can go to our Living Your Lifestyle You Deserve.com site. Check us out. Now, just before we go, and we just have a very short bit here, what's going on in the stock market today? Should people jump into this thing? Should they be fearful? They got the Greek stuff coming up, and they don't know what's happening there. The economies are upside down, and the jobs are precarious. There's no security anywhere you look. Prices on food are going up. Gasoline is sitting there waiting to take a power jump over the top of the mountain. What about stocks, John? I mean, you know, just quickly, just in say one line only. What do you think? Okay, investing will certainly use your system, but what else? Is there anything else you can tell us?
Nobody knows what's going to happen next.
The market's always right.
Market's always right.
Okay. So that's pretty exciting. So listen, thanks very much, folks. Glad you joined us. Living a Lifestyle Deserved, talking about financial wellness with John Bannan. He's a guru. Thanks for joining us. See you next time.